Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is July 11th, 2012, and we are currently looking at price action on the 10-minute chart. And as you can see, we had a pretty interesting trading session today as the market shifted from being risk on earlier during the Asian and European session to being risk averse during most of the US session. And this really created a lot of whipsaw activity and volatility in the pair, and if you weren't careful, you could have been easily stopped out of a position prematurely. So then, of course, if you look to your left, close to the daily open or the Asian open, you can see that the euro began to rally, and it really began to pick up steam after we received the announcement from Spain. Spain had announced that they had come up with new austerity measures that would help them to meet their deficit targets. And this was really a part of the actual bailout agreement for Spain. So then when that announcement came in, we saw this pickup of movement to the upside, and the pair began to rally upward. But of course, it reached resistance right below the 2300 psychological level. It found resistance at 2297, and it was at this level that the market sentiment changed, and we began to see signs of the of weakening of the euro. And for most of the U.S. trading session, we see this bearish move in price, and we saw the pair fall 84 pips from the session high at 2297 down to the session low here at 2213 for about 84 pips. Now this 84 pip range for the day, it isn't too large. Typically we get a much larger average daily range for the Euro US dollar pair, but this is pretty typical, and it's really just a depiction of just the thin volume and liquidity normally seen during the summer months. And we normally get the summer malaise, and we get, range bound trading and range bound activity. So this is pretty typical, and I know for the past few days we've been trading within a tight range, and in the average daily range, or the daily range for the past few days, have been smaller than usual. So then of course we see this bearish trend for the day, this bearish move for the day, and this was definitely kicked in after the FOMC minutes were released, and we saw the pair, even fall further and break to a new yearly low. But of course, if you were in front of your platform and you were looking for an opportunity to enter the market and enter a short position, then there was plenty of chances to do it on a significant pullback from support to an area of resistance. So if I were in front of my platform when price began to retest the highs for the day near this 2300 psychological level, then you would have noticed that on two other occasions, like of course here and here on yesterday, you see that they found this 2297, this 2300 psychological area as historic resistance, or a good area where you could have placed a short position. So what I would have done on the retest of this area on today, I would have placed a sell order at 2290 upon bearish confirmation, and I would have took my profit when price had reached near yesterday's close at 2251 for about 39 pips. So then I would have closed it near yesterday's close at 2251 for about a 39 pip trade. So if I were looking for another opportunity to re-enter the market and actually go short, then I would have done so when price had pulled back to an area of resistance. So then I would have entered another sell order when price reached resistance at 2284, and I would have entered my position at 2278 upon bearish confirmation, and held out onto this trade and took profit when price had reached like yesterday's low here at 2236 for about for about a 48 pip trade. So then of course these were two entries that you could have entered, for this currency pair on this downtrend for today. And if you were in front of your platform after the release of today's FOMC minutes, then you could have also entered another short position and gained some pips on this move lower. So of course it appears that the trend is bearish. We're going to see further euro weakness, and if price continues to fall, after the Asian Open. As you can see right now, it's currently consolidating around 2240 area. And if we see further declines in the pair and it breaks past this new yearly low at 2213, then we can see a further continuation of this bearish trend towards the 2160 or 2150 area. So that's just something to take note of. Or, you know, if after this consolidation, if we see a rally to the upside and price begins to break this resistance at 2297, then we may see further short covering, which will push price higher, and we may reach yesterday's high at 2333, and it may find resistance there. And if it breaks past this resistance, yesterday's high at 2333, then we may see a further continuation of this bullish trend towards the 2380 area. So then that's it for our technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, bye.